The low trading is closed on November 14th, 2017. Yesterday we said unless we gapped up, the pattern was negative and lower prices should print, which they did. We had an optional target that was taken care of early. We also waited 5 days to get our 25.72.62 target, but it printed. When it printed, it was good resistance and excellent support. Early on, MEJT said ultimately higher price would print. They did, but it says the late rally is false. Gives us a target of 25.73.40. Unless we gap up smartly, which looks unlikely because futures are down, that's my target. We have conflicting indicators. The commonest thing is we gap and quickly move outside the day's range. Next most common is we close a little change and have that move the following day. It's positive that we gap down, hit a lower low, couldn't hold on to any of these lows. The positivity is negated if we gap down, if we gap in either direction, I should say, and promptly undercut these lows. It's negative that once again we had an all-day rally, couldn't close over the early highs. The negativity is erased if we gap either direction and move over these highs promptly. Futures are down smartly. We have a wave count here which suggests that this wave's over. We have an ABC with C and A related by a Fibonacci ratio. We then have an ABC with A and C related by a Fibonacci ratio. We have a long-standing call that this leg is most likely over. All we need to do to confirm that really is to start undercutting some of these lows. We came within a fraction of undercutting this low today, but if the futures action is indicative of what will happen tomorrow, we should gap and promptly undercut this low. That would pretty much assure we undercut that one. If this one goes, and that's in the 2540s, it's pretty hard for me to see how we recover. If that's true, then in wave 4 of the grand pattern, we'll have completed A and B. C should have some kind of relationship to A. To create, or maintain, I should say, the wave 4 look would make the most sense if wave gray C was equal to twice wave gray A, putting us back in the 1900s. That's a bit further ahead than I usually look, but at least it's plausible. I take things a day at a time. The most common thing for tomorrow is we gap and promptly trade outside the range. Futures and the wave count suggest we're going to undercut this low early, and if that's true, then the call for the end of this leg is going to look stronger still, and that's today's call.